Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of Dig Deep, the mining podcast, the show that brings you the latest insights, thought leadership, and stories from across the global mining industry. In today's episode, I'm joined by two guests, Sean Wade, CEO of Power Metals Resources, and Ian Freeman, CEO of Minestarters. Sean's been on the show before, and Power Metals have been building momentum with its diverse portfolio and project incubator model. And Ian joins us for the first time to introduce Minestarters, a new platform that brings blockchain and tokenization into the world of mining finance. In today's conversation, we're going to cover the progress Power Metals have made since Sean was last on the podcast. Also Ian's journey from founding Minestarters and how the platform has opened up new opportunities for project funding. We're also going to discuss the challenges for traditional mining finance and how this partnership complements Power Metals' strategy, and both companies have planned for the months ahead. So Sean and Ian, both welcome to the podcast. How are you both doing?
Great. Thanks, Rob. Thanks for having us.
Great, Rob. Yeah. Nice to meet you. Always good to see you as well, Sean, obviously.
As we always start these podcasts off, I wonder if you both can just tell us a little bit about your careers, how your careers developed, so our audience knows a little bit about yourself. So I'll start with Sean.
Okay, thanks a lot, Rob. And as I said, thanks very much for having us on. It's a great opportunity to talk about Minestarters and obviously Power Metal as well. So, look, I've been the CEO of Power Metal since March 2023. And prior to that, I was in various business development and IR roles, mainly within the natural resources space. And prior to that, I was a finance guy. So I spent 20 years in the city helping mining companies to raise money, helping them to tell their story to investors. And you know, I've really been sort of involved in the resources industry for a long time. But, you know, what I hope to bring to Power Metal is, you know, a reasonable understanding of the capital markets and how we can get projects funded. And as you know, in your summary, very accurate summary, we are a project incubator model. And so what we're seeking to do is to explore, develop, and crystallize our assets. So that's been my journey up to this point. And you're very keen to develop the conversation and talk about Minestarters.
Yeah. Ian, and your background?
Thanks, Rob. Yeah. Thanks for having us on. Well, like I say, look, I've spent my entire career in, I would say, and I'm fascinated by very early stage technology startup companies who are seeking to get into very early stage, high growth segments. If I give you an example, I mean, many years ago, I worked for a very small digital media agency where we produced the first CD-ROM for the BBC, the first Doctor Who CD-ROM, if you remember those days, and then progressed from there. And I was fortunate enough to work with a guy called Don Tapscott. This comes on a little bit to the blockchain piece, really, in 2008 at a company called Engineera. For those who don't know, he's the guy who wrote Wikinomics, the blockchain revolution, growing up digital. And at that time, he was evangelizing about blockchain and what it could do. It's just around the same time as blockchain was coming into focus. I mean, it's been around for 17 years now. It's quite important to know that. And so, yeah, my passion is taking very early stage technology businesses into regulated markets. And I guess from there, I moved into the sports betting world and a company called Canby. And we took that from that sports betting platform, which was risk management and the movement of money, really. It's a financial model, risk management. It was a trading platform, you know, publishing markets. And at that point in time, many of the global markets were just regulating, actually. So our journey was very much about preparing platforms, taking them to market, marketing them, ensuring that they were compliant, ensuring that they were institutionally recognized, and that was part of my journey. And we ended up listing that business in 2016. And I've always been fascinated by blockchain. And then I met Mark Daly, Jonathan Henry, and Sean, and they were very gracious enough to give me the opportunity to become involved with Minestarters and take my passion for technology, my interest in blockchain, to market with this wonderful opportunity, this great project. So yeah, that's a little bit about me.
Yeah, great to hear. First of all, Sean, I just wanted you to just give us a overview of Power Metals, and a quick overview of obviously of the company and what progress you made since we last spoke, which was probably about 2 years ago.
Sure. Well, a lot has happened in those 2 years, certainly, Rob, and we've been very, very busy. So, Power Metal is AIM listed. It's around about a 20 million market cap, and we are very firmly in the space of the project incubator. Okay, as I mentioned at the top. So we're not a kind of conventionally in the resources space, you would get, well, there are lots and lots of juniors, some of whom have 1 or 2 projects, which obviously they're working hard to bring to value and to fruition, and which is obviously a fantastic model. We're doing something slightly different, which is to incubate multiple projects over multiple geographies at the same time, and looking to essentially create, if you like, public companies. So we would take early stage assets, we would do some work on those. Now that can mean sometimes very early stage geophysics, geochemistry, and so on. It could mean exploration drilling. It can mean resource definition. It rather depends, obviously, on where the particular asset is in its life cycle. But then what we seek to do is to get the appropriate amount and structure of capital into that business, such that it can fulfill its goals, and then crystallize that, usually through a public market transaction. So I'll give you 3 examples of where we've made progress over the last couple of years. So the first one I would usually talk about is Guardian Metal Resources, because a lot of your viewers will know that as having been an extremely strongly performing stock over the last couple of years. One of the first things I did as CEO was to get that IPO away in 2023. It's the largest undeveloped tungsten asset in the US. It's grown its business very substantially from that IPO. It's acquired another asset. It's obviously done lots more exploration drilling, and it's been a great success for investors, obviously us being one of those. We started with around, just rough numbers, around 45% of it after IPO. We sold a chunk down at the beginning of this year, and then we just recently exited the balance of the position. So that's brought in from an initial investment of nearly 12 times a return for us, so 11.8 to be exact. So we brought in over 22 million pounds of cash over the course of the exit of the investment. So that's been highly successful. It's obviously added a great deal of value to our balance sheet, and at the moment we're sitting on on a nice pile of cash, which has hopefully come to the attention of lots of our investors. So that's number one. Number two, also on the IPO trajectory, our assets in Australia under the label of First Development Resources, we IPO'd that only a matter of weeks ago. That was quite a difficult deal to do, because, as we could probably go on to talk about, capital markets have been pretty tough over the last couple of years. But we've got that deal done, and actually it's been extremely successful. The shares have gone up. We still own 43.44% of that. And the exciting thing about FDR is that they are actually undertaking a drill program as we speak, literally as we speak, in the Patterson, on a heavy air-on style deposit, which we think is potentially highly prospective for copper in particular. So that's going on at the moment, and if that's successful, that's going to add a tremendous amount of value. And at some point, not in the foreseeable future, but obviously at some point, we would seek to crystallize that for our shareholders as well. So the idea is that we get started on the projects, we turn it into a company, IPO that business, and then over time we will exit the position. So similar, I suppose, in a way to if your viewers would know Dundee Corporation, for example, in the US. It's a company that obviously we would love to be considered in the same sort of category as Rick Rule, who, as you may know, is a big shareholder of ours. Is very passionate about what he actually calls the merchant banking model, which is something that he's obviously had a lot of success with. He's talked in interviews with me, and obviously, on his own, about Dundee and about what he calls the objective to turn, 10-cent coins into $5 bills, or whichever way you put it. And that's what we're seeking to do. So if people think, well, what are you? Well, what kind of business are you? Think of Dundee, think of Sprott, those kind of incubator models. Okay. And then the third one, and a slightly different route for us in terms of crystallization, was a deal we did with a major investor called UCAM, with our uranium assets in and around the Athabasca Basin in Canada. So we had 17 or 18 projects, and we've gone into a joint venture with UCAM, where they've invested £10 million into the JV vehicle. Our shareholders own 30% and they own 70%. We're exploring as we speak. So we've undertaken 2 programs already. We've got another 3 to do in the current series, but there'll be, in all likelihood, more to follow after that. And we've started to see some good progress there, in particular at what's called the Drake Lake Silas asset, which actually is not Athabasca, it's in Newfoundland, but it's all part of the same package of assets. Now, at some point, I'm sure if those series of projects are successful, we will seek to exit that as well, and we will crystallize that value for our shareholders. So those are just 3 examples of the progress we've made. I mean, look, the markets have been difficult. It's been difficult for investors to value the company. Naturally, my job is to deliver returns, and whilst we've increased the size of the balance sheet very substantially, on a per share basis, which is how I like to look at it, investors have doubled their money in respect to shareholders' funds per share, but that hasn't obviously necessarily translated into a higher share price, which is naturally what people want to see. Now, we can debate for hours about why that might be, but we do feel that as the commodity cycle is now picking up, and we think, and as we continue to make successful investments and exits, that discount will start to close. And obviously the Minestarters opportunity is a very, very good way, I think, of seeing that value creation.
Yeah, thank you, Sean. Ian, I just wonder if you just give us an overview of Minestarters and discuss obviously the platform that you're developing.
Yeah, sure thing, Rob. Look, I probably best to describe Minestarters as we're a fintech business in the commodity space, and we are looking to transform, the mining finance or the early stage project finance business through the tokenization of those that diversified portfolio of mining projects. What that means is that really we're leveraging blockchain as a decentralized finance network. That's all it is, really. It's an enabling technology that connects capital pools. And through the use of that technology and connecting those capital pools, we think we can raise substantial funding for these early stage projects in a way that has hitherto been quite difficult to do. And I've seen over the years how technology can unlock these kinds of opportunities. And when I met Marcel Nally, who was the founder, part of the story, the Moshiko story, who has a lot of experience of growing these businesses, and of course Sean and the Power Metals crystallization successes they've had, the ones he's just listed. When you look at it, bringing those 2 things together, all the USPs we have, plus the enabling capabilities in a market that's super hot in terms of tokenization, it just looks like a very compelling proposition. So what we do, in essence, is, and I don't know if it's worthwhile me just walking through a little bit about how blockchain and sort of DeFi works, if that's helpful.
Yeah.
Look, there are far more highly qualified blockchain experts than myself out there, but let's just talk about what it is. I mean, it's a little bit like it's an immutable ledger in effect. Each block holds the same data across all of the blocks. So it means that it can't be changed. If something in one block attempts to be changed, all the other blocks will stop it if it doesn't reconcile. So it's an automated ledger. So it's a little bit like a bank account. It does things for you automatically. It's got something called it's got some smart contracts on the block, which programmatically execute on milestones as they're reached. So basically it's like a contract that's programmable, and when something happens, it automatically settles. A little bit like your bank account will send out a direct debit every month, or a standing order every month because you've told it to, and programmatically it looks to see if there's funds in the account and it'll execute. The only difference is with a bank, it tends to be centralized. With blockchain, it's decentralized. And what that means is that all of the information is distributed across all of the blocks in the chain. And so therefore it's distributed ledger. And that's pretty much how it works. And from a decentralized finance perspective, what this means is that you get accessibility from pretty much anywhere in the world, 24/7, and you can pretty much trade 24/7 from all kinds of geographies globally. And so it's really a sea change in the way that traditional finance works. I mean, outside of the mining community, what we're seeing here is some people have described it as one of the biggest revolutions for 100 years in traditional finance. I mean, it's in the future, nobody's going to say, what is tokenization? It will just be an embedded part of the traditional everyday financial market. And I think the vision of Mark and Sean to take this to market now is tremendous because it's a first mover advantage and it allows us to take a position in the white space in the mining commodity sector that nobody else has done. And it's tremendously exciting.
Yeah, I suppose continuing on talking about blockchain and real world asset tokenization, what would you say the growth opportunities are with this, especially within obviously the mining industry?
Well, I think the way we see it, it's about unlocking liquidity and expanding global access. So, and again, historically, the mining, let's say the mining investment community has had to lock its capital up for quite a long time. The bar's been quite high, not, early stage project financing, not necessarily appealing to many, depending on the market cycle. Whereas there are likely to be, and we believe there are many liquidity pools globally that would love to have the opportunity to invest in these early stage projects where, in the value chain, that's where the biggest returns are, but can't actually put their money in. There's no way to do that. And so what tokenization allows through this distributed sort of decentralized finance network that's enabled by the blockchain, it allows us to take this on-chain capital and if you like, bridge to the off-chain real-world asset and capitalize some of those projects using those funds that are coming from pools that couldn't access this kind of investment opportunity before. And from chatting to the communities, both in the Web3 space and in the institutional space, there's a real buzz around the opportunity to do that. And that's without even talking about the returns, the yields, and, the ability to trade this 24/7. So it's transformational in many ways.
Coming back to you, Sean, what does this say about traditional mining finance? And I suppose what issues have you identified with the conventional routes that have pushed you to seek a radical different financing options for obviously power metals?
Look, that's a really great question, Rob, and it's absolutely to the heart of our model, our investment case, but also to the industry overall. I mean, just a couple of points to start. Really, I mean, Ian mentioned locking up capital, which is critical here, and I just want to give you an example of that. So, I talked about First Development Resources. Okay, they've got a fantastic asset. It's a really exciting drill program, and I'm sure if it's successful, it's going to make people an awful lot of money. To get it done was incredibly hard. And what we found was that, I mean, during the COVID period, a lot of these projects got funded and, got away and were very successful. Post-COVID, a lot of that capital dried up, and it was very, very difficult to raise money. It was, we had pre-IPO investors who were incredibly patient, having been locked up for a very substantial period of time. We had lots of different options, lots of different attempts, if you like, to get the IPO done with different sets of investors, overseas, more, and all sorts of activity going on behind the scenes, which people didn't really see. And it was, so you had a scarcity of capital. You had the cost of that capital very, very high. In other words, we couldn't get the kind of maybe the price we would have most liked to have got for people. and people's capital was locked away for a substantial period of time leading up to that. Now, um, our capital, I mean, this is not the other investors, obviously, but our shares are also locked away post the IPO. Now that's a different matter. That's not about accessibility to capital. That's obviously our choice in order to give investors confidence that we're going to, we're not going to sell the shares and so on. But it does sort of slightly speak to the same point, which is that to get these kinds of things done, you have to get large amounts of capital, and it is expensive to get, and it has to be locked away for a substantial period. So when Ian talks about bridging that sort of traditional financing hub, if you will, into a much bigger pool of capital, that is absolutely music to our ears, because it suddenly means that we can access more capital. The cost of that capital is cheaper. It's much more liquid. It's not locked in, as Ian said. These tokens will trade 24/7. You've got a whole new pool of investors who perhaps haven't really looked at mining, and certainly, well, not certainly, but pretty likely aren't big investors in the equity of junior mining companies. But nonetheless, the projects are still there. They're still great projects, still waiting to be funded, still looking for their opportunity, but really hamstrung by the availability of long-term capital. So, look, the market goes in cycles, and I'm not saying that the equity market for exploration is completely dead. That would be silly, but it's certainly a lot harder than it was 2 years ago, 3 years ago. And if you go back, 10 years or even further, where it was relatively straightforward to put a management team together, go to the market, get some cash, get some equity, and then come to the market and do the business. It's those are the halcyon days. It's now very difficult. So for a model like ours, which depends on access to capital markets, the last few years have been tough, and that's obviously been reflected in our share price. And despite that, we've managed to achieve a lot of success. Now, when I was introduced to Mark Nally, this was initially it was a very short conversation, because it was perfectly obvious this was a fantastic idea, something that we really were keen to get into. We signed an exclusivity agreement with him straight away, because I could see very clearly that this is is not the, well, as I said earlier, we're not calling the death of the equity market, but this is the future of financing, of the way that financing will be structured. The smart contracts Ian's talked about. I know this is complicated stuff, and I know for a lot of mining investors, sort of, what's all this DeFi, blockchain? I don't, and there's a lot to get to grips with here, and we're obviously we've produced a lot of materials that I hope help. And obviously we're doing lots of talks like this, which I hope help. It is an iterative process, and I think people will see as it develops how this is really going to unlock things for us. But the way I put it, quite simply, is look, the world we've been in and are in is tough. It's reduced very substantially. What this is going to do is going to take our existing model, and it's going to develop it further. It's not a change of business. The exchange wouldn't have let us do it if it was. It is a development of what we're already doing, but in getting ourselves access to a much larger pool of capital, and with that, obviously, much bigger and better projects, and the opportunity to deliver a lot more value to our shareholders. So, look, as I said, it was a meeting of minds for us. It does speak to the state of the market, and I think the first mover advantage here, is the really important part.
Yeah. Staying with you, Sean, how does Minestarters complement the Power Metals project Incubator model that you've just described?
Yeah. So, well, I mean, look, there's one way of doing it, which, if you were to take the Rick Rule view, which is that we're a merchant bank. I mean, we're not technically, obviously, a merchant bank. We're not regulated as such. Clearly, we're a early stage mining incubator. But he talks about that as the model that we're trying to follow. So, if you accept that premise for a second, and you say, well, okay, well, you're still doing that, but what have you now done? Well, you've added a fintech dimension onto that. There's I've in the course of getting to this point, naturally, I've tried to get myself as educated as possible on blockchain and Web3, and there's some fantastic material out there that people can read. And it's this point about Web3 and how Web3 is going to change not, well, it's got to change everything, but it's got to certainly change the perception we have of the internet, what the internet can do, and it creates this fintech dimension to our existing model. Now, we're still going to be doing the same things. Okay, we're still going to be looking for early stage early stage assets, and we're going to be looking to fund those, explore, develop, and crystallize those assets. But we have this, which will be quite substantial investment in Minestarters, which is going to be the engine for that next level of growth. It's going to bring the projects in. It's obviously going to bring the funding in. We're going to own a substantial amount of that, and there's a very strong synergy between our two businesses. The projects will come to maturity within the context of Minestarters, and my job will be to help to crystallize those. So people shouldn't think that this is a change of business. It isn't by any means. It is a development of our business and a sort of an enhancement of our offering, if you like, by using this fintech aspect through Minestarters.
Yeah. And just staying with yourself, Sean, and to summarize, because obviously some people listening may be thinking this is pretty complex, but why should shareholders and potential investors be excited by this investment and what you're doing with Minestarters?
Well, that's another very, very good question, and it's very perceptive of you, because one of the feedbacks we've had, and it's perfectly understandable, is a lot of people have really done the work on this, and they've looked at our materials. A lot of them have engaged with me directly, and they said, "Look, I think I love what you're doing, because it's a great sort of enhancement. It's a big pool of capital, right? I get that, but what I don't understand is how I, as a Power Metal shareholder, or how does the Power Metal share make money out of this? Because I can totally see how a token holder makes money. You issue the token holder buys it, that cash goes into the treasury at Minestarters, that cash then goes to the project succeeds, value goes back to the token holder. Great. So, I probably want to own the tokens, don't I? But I don't. I own the Power Metal share. So how does that help me? And I want to put this quite in simple terms, because it's something obviously that's critical to the model and the value creation proposition. So if everything comes to pass as we anticipate, we will invest up to £3 million for up to 49% of the equity of Minestarters. So let's call that, obviously roughly half the value of the company. The Minestarters platform itself will earn fees. It'll have revenue. So there'll be deal fees, platform fees. There'll be, over time, not obviously immediately, but over time, there'll be royalties and streaming deals with assets. So that business will make money and will be standing on its own 2 feet, actually, in all likelihood, very, very quickly. But it will also retain a number of tokens in its own treasury. So if you are, we're not giving sort of hard numbers at the moment. We're still in development at this stage, and we don't want to create sort of expectation. But if you imagine illustratively that we issue 100 tokens or 100 million, whatever, 100, then initially some of those will be sold to the market. Let's say, again, illustratively, 10% of the tokens get sold. Obviously, Minestarters retains 90. Those 10 are the cash is deployed. The value of the token goes up. Minestarters still owns a substantial amount. Now, over time, they sell more into the market, into hopefully higher prices, but still retaining a sizable portion, at the bottom. So if the token does well, Minestarters does well. So the token goes up from 1 to 10. So do the tokens that are held by Minestarters, and they're by extension the Power Metal shareholders. So I own 49% of something that's got tokens which are increasing in value, that is making revenue, and where projects are succeeding and, as it were, sort of churning returns back into the model. So look, we've put a lot of this into our materials. We did a series of tweets which illustrate all of this. I know that a lot of this is complicated. I do urge people to, send me an email at info@powermetalresources.com if we can help more on this. We're very happy to do meetings with shareholders to talk directly to them about how this works. But I really want to get across that I believe that the Minestarter platform, the business itself, will create a tremendous amount of value. That value, 49% of that, will be owned by the Power Metal shareholders. So, it's a, and I'm sorry, I know this is going on a little bit, but just one other point. is that we're not actually putting a tremendous amount of capital at risk here. Okay, we have ambitions for this business that, we see it making very substantial value. But what am I actually doing? Initially, I'm spending £1 million to get a 35% shareholding. That cash is going to be spent in the development phase to get the platform up and running and to create a number of things, including a minimum viable product, having some projects onboarded and so forth. And I think it's fair to say, and I'm sure Ian would agree, that, once that million has been deployed, it'll be fairly clear whether this is going to work or not. And at the end of that period, we just then decide, okay, is this working? Yes, it is. Okay, in which case we're going to deploy another 2 million to go up to 49%. At that point, what I'm hoping is that actually we'll be just really buying cheap shares as opposed to putting in more financing for the business to succeed and develop. This business should start making returns fairly quickly. So, what am I putting at risk? In reality, I'm putting up to 3 million at risk, but really, I'll know after spending 1 million if this is going to work. Now, £1 million is a lot of money, especially when you've got a 20 million market cap. But, spending commitments across the projects are also pretty serious. I mean, we're spending money at the moment in Oman, for example, earning into a number of projects there and in Saudi Arabia. Obviously, we have spent substantial sums on our current asset base. So, I'm very comfortable, given that I've got, a balance sheet, with cash and, some 17 plus million, that this is that the risk return profile here is appropriate for shareholders. And that, we're not betting the whole cash position. We're not betting the house on this. We're making a relatively modest and sensible investment in something that we believe has got very, very high growth potential.
Yeah. And Ian, what can we expect from Minestarters in the sort of short term, maybe next 6 to 9 months? And what should people be looking out for? And obviously, where can they learn more about what you're trying to develop at Minestarters?
Yeah, great. Okay, look, good questions. Thanks, Rob. And I just would like to build a little bit on some of the things that Sean was saying. Just maybe to put it into context, like for those who are not in the technology world, I would simply say, we all know how online banking has helped us in our lives, but we don't necessarily need to know how the internet works, right? I think when you think about blockchain or decentralized finance, just think of it like that. One statistic that I came across recently, which is fascinating, is that the number of people holding digital wallets globally is growing faster than the adoption of internet when it first was released. Now, what that says is that people are looking at how they can work with crypto and tokens and how they can invest. That's where there's a lot of capital there. So that's a really interesting data point. And of course, really important to remember that our token is supported by real world assets. Okay, so it's not something that's just out there in the ether. It's supported in the same way that a stable coin is supported by a real world asset, or your mortgage is supported by a real world asset. So is our business. It's underpinned by some real world assets. So, that's a little bit on the investment proposition. I guess in terms of how they can learn more about us, we have a website, www.minestarters.com. You can obviously go there. There's a little bit of information there. But what I would say in the next 3 to 6 months, what we have is a very streamlined execution plan. So we will be launching our utility token. That will be the initial token over the next 3 to 6 months. And that will come with a fanfare and some marketing, and people can invest in that token if they wish. And then we will progress to launching a fully fledged security token over the next 6 to 9 months once we go through all the regulatory approvals. We're building an institutionally robust, highly regulated product offering to go to market. So the platform needs to be of a very high standard. And so these are the milestones that we have, and these are the standards that we hold ourselves accountable to. And I would say that the final thing is, if people want to really understand a little bit more about real world tokenization and the real world asset tokenization, there's two things to look at. One, in the last 6 months, the real world asset space has grown from 6 billion to something like 30 billion. A month ago, it was at 28 billion. It's now at 30 billion. And that's a drop in the ocean to the 17 trillion that the Boston Consulting think is going to be in another 10 years. And the second point to make is that you can go and find, if you go to the sec.gov website, there is a paper there called Project Crypto. And that is written by the US government. And it's very digestible. And it gives you a real understanding of how they see the transformation of capital markets towards decentralized finance. And it's really insightful. And, to Sean, I think Sean and Mark's vision, the timing is tremendous. And I think it's an extremely exciting project. We will execute on our side. And any questions at all that anybody has, I'm sure Sean or I would be happy to take them. But I think it's, from a research perspective, please do look at those two areas, real world asset growth and Project Crypto. And I think you might be a little bit stunned if you haven't looked into those areas before, because they're quite insightful.
Yeah, great. We'll include all those websites and contact details in our show notes anyway. And I really appreciate your time, both Sean and Ian, and obviously telling us about a new way to, I suppose, get liquidity back into our mining industry. It has been scarce. It has been scarce over a number of years. I get a lot of, obviously, junior miners coming onto the podcast and struggling for finance. And I think this is just a start of a way that more money can come into our industry, and for especially a lot of these projects to really get off the ground and make a difference in what they're doing. So I really appreciate both of your time in sharing your vision. And I'm sure our audience, you'll be getting a lot of questions from our audience, and really trying to understand how they can get access to more liquidity by using some of these new platforms, and obviously your platform out there.
Rob, may I make one plug? If you have a lot
certainly.
of junior, if you have a lot of junior, we have an array of projects that we're qualifying. But if you do have junior mining projects who are coming to you and asking, come to our website and drop us a 1 or 2 pager, and we'll happily evaluate the project and bring you into the program. If you have listeners and watchers out there, viewers, we'd be delighted to see if we can review some of those. Yeah, that would be, if I may use this opportunity to do that. So yeah.
Yeah, certainly. This is obviously an educational platform, and I encourage any listeners to reach out to guests for more information and maybe form partnerships. So this is what this platform's all about. So encourage any of our listeners to share this episode and encourage other junior miners to contact both Ian and Sean to obviously help with their financing of their projects. So thank you guys, really appreciate your time. And
thank you.
Hopefully you can come on the podcast next year and give us an update on what's happened and how things have developed.
That'd be amazing.
Yeah, great.
Yeah, thank you, Rob.
Yeah,
cheers, Sean. Thank you. Take care, guys. Bye-bye.
Thanks for listening. I hope you enjoyed the episode. As always, appreciate your continued support. And as we've obviously just discussed here, I think it is an episode that we do need to share amongst our community, because as both Sean and Ian have demonstrated, liquidity is an issue in the mining industry. And both Sean and Ian have looked at maybe developing something to get that liquidity back into our market. So I do encourage you to share this episode, and obviously look at the links that will be in the show notes to really understand what tokenization and blockchain is and how that's going to help our mining industry. So thank you again for listening, and until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.